All right, guys, we're back on the Kevin and Fred show, and today I am joined by Scott Krone. And Scott, number one, first of all, thanks a lot for being here today. I appreciate that. I'm looking forward to having our conversation and kind of talking about your journey in real estate and investing and in your specialty and all that good stuff. So thank you for being here.
Thanks, Kevin, for having me. I appreciate it. Really looking forward to today.
Absolutely. So Scott, why don't we do this? Let's get started with a kind of a short bio for the listener, maybe who doesn't know who you are yet, or kind of hasn't run across you on another show. Um, give us a little bit of background on Scott. Who is Scott, and kind of how'd you get to today?
Well, I began in real estate, getting my master's degree in architecture at Illinois Institute of Technology, and my professor also owned a real estate development company that focused on architecture and contracting. And so what he would do is he would have us work on his projects in the office during class. And as being his TA, then I would work for him in his office in the morning, go to school in the afternoon, work on his projects, and then do homework for him, which was, his projects again. So
Smart guy.
So we were working on, I'm sorry?
He understands leverage at a high level.
Exactly. And so, for me as a student, as a graduate student, I'd rather be working on something realistic and actual versus hypothetical or, just a concept. And so for me, it made it a lot more applicable. And so I worked for him while getting my graduate degree. And then when I graduated, I also continued working for him. So my master's thesis was like $100 million project, 400 unit condominium development. And so I worked on that, plus also on some other developments for him during that 6-year period of time. And then in 1998, I began Coda for myself, and we were a development design build firm. And in 2013, we started getting more into the commercial after the big crash in 08-09. We started, buying multifamily in 08-09, but then transitioned to commercial in 13. And that's where we've been focusing on self-storage at that point in time. And we recently just launched our own self-storage brand, One Stop Self-Storage. So we've taken all the management in-house, and we're managing our own facilities now.
So I guess that leads me to two questions. Number one is what was the thing, or was there something that kind of led you more towards that focus on self-storage? And then I'd love to know more about how that second piece there that you mentioned, kind of that all-in-one piece with it. So let's start with this. Like, what was it about self-storage that made you, I guess, sort of decide to focus your efforts there?
Well, while I was also running our real estate development company, I was also teaching at IIT, and I taught second-year studio for 5 years. And I was presented with an opportunity to be a real estate coach. And I took that as opposed to the teaching because, again, I wanted to see people that had a higher level of commitment. And for me, people that were doing real estate coaching were more committed than undergraduate students. And so I got into that, and I had a student that was a client, I should say, that was trying to define distressed self-storage. And we were analyzing deals all over the country, and we could not find a distressed self-storage facility. And this is in the height of, the crash. And so I really began focusing and trying to understand why that market was resilient. And I began learning more and more about it. But I told him, I said, if you're trying to get into self-storage, developers always make the most money in real estate. If you change the program of something, that's when you can make the most yield. And so we talked about him, buying a property and developing it into self-storage. And we had a client that we went under contract for, this 90,000 square foot building just south of the city of Chicago Airport. And the mayor gave us her nonverbal approval. She was nodding her head yes, but she never said yes. And we went under contract. And what turned out, she had a change of heart, and she came back and said, I can't support that use. But if you come up with something else, I'll support it. And so I called up my client. I said, hey, I got this 90,000 square foot warehouse. Do you want to bring in your self-storage consultants to see if it will work? And if not, no harm, no foul. If you want it, great. So he came in, they looked at it and said, the site's great. We only need 50,000 square feet. And then they changed it to 70,000. So we held 20,000. So we flipped it to him, but they said, we need someone to develop it. We don't know how to develop it. And I said, well, we'll develop it. And so They hired us to develop it. We had our 20,000 extra square feet, and then we flipped the whole thing to Compass self-storage when it was all done, including our 20,000 square feet. And so that was my foray into self-storage. And at that point in time, I learned a lot about the underlying financials of it. I understood the development side, I understood the construction, but I got to understand the business side of it. And that's how we got into self-storage, and we've just continued doing it since then.
So just for context for me, so what year was that when you guys actually had kind of developed that and then flipped that to the, I think you said Compass Self Storage was the company?
Yeah, we went to contract in 13 and we built it in 14 and we flipped it in 15.
Wow. Okay. So that was already six years ago. And so now that's obviously progressed because you mentioned too there just a few minutes ago about your business, the one-stop self-storage, right? And so
Correct.
kind of, would you mind giving me a little bit of background for the listener? What exactly is that? One stop sounds like, I'm assuming it means you guys can kind of handle it all, but like, what exactly is
it worked.
that? You know what I mean? Right. So it's so simple, even a realtor can understand it. But what when you say that, what do you mean by that? Like what all is in there that we don't know is involved in self-storage? Because I know a lot of people, like, part of the reason I'm even in real estate is because I read Rich Dad Poor Dad once, right? I know a lot, and so they reference self-storage and other passive investments in there. So I know a lot of people that are like, they think they want self-storage, but no one really it's like anything, you don't know what's involved until you get involved. So tell me more about one-stop self-storage and kind of what you guys do.
Well, a lot of people say, well, I understand multifamily, but I don't understand self-storage. For me, self-storage is a more simplistic version of multifamily. It is the most basic concept. It's apartments without toilets. It's apartments without kitchens and sinks. And because of that, we don't have a lot of the regulatory conditions that apartments have, especially like here in the city of Chicago. They penalize landlords in terms of the relationship with their tenants. So we don't have those sort of restrictions. So it's a lot more simplistic version of multifamily. But to answer your question, most transactions within self-storage are focusing around difficult times of change. And those transitions could be like divorce, displacement, death, or downsizing. And so typically when people are looking for self-storage, it's because they're trying to address a problem. And for us, the focus of our company is how to solve that problem better than other companies. Most of the time when we were looking at branding our company and developing our company, we had our interns call every single major REIT out there in our markets and ask them questions, and try to find out how they went about their process of selling. And what we discovered was that every single one of them, it came down to the price. We have a 10 by 10, it's $100. We have a 10 by 15, it's $150, whatever the dollar amount was. But they didn't try to solve the challenge or the problem or understand what their client was going through in order to enhance that experience. So for instance, if 50% of our customers are businesses, 50% are residents. So does a business need to go there once a week? Do they need to go there twice a week? How frequently are they going? How much more important is location within the building for them versus someone who's only going to go there once or twice a year? There's two different objectives. There are two different goals.
Yeah.
And so the more that we understand about what the customer is going through, what we refer to as our client is going through, then the better we can come up with a solution for them that will solve their needs. Obviously, size is one of those things, but getting the right size, getting the right location, getting the right price point, these are all factors that come into it to make sure that their experience is the best as possible.
Awesome. So let me ask you this, is your business, obviously I got to imagine it's changed quite a bit over the last 5 or 6 years now that as you started doing this, how much of your time or your business in Coda management as well as like is actually devoted towards self-storage versus because I know you guys are involved in green homes and things like that and other investments. Give me an idea, like percentage wise, maybe of assets and time are you spending in self-storage?
Well, we sold off all of our multifamily. So 100% of our investment time is on self-storage. So,
Wow.
we have facilities now from Wisconsin, Illinois, Ohio, Kentucky, and Maine. And so we've developed this brand across the country. And we're starting construction in Louisville, and we're on the design boards for projects in Florida as well as in Ohio.
That's awesome. I love that. I think one of the key things that gets um, missed in our industry, not just our industry, probably most others, is that when we narrow our focus, and in this case, self storage, our business and our world tends to get a lot bigger, right? Because as we
Yeah.
get to we go deeper on that one thing that then actually opens up so many other opportunities. And I see that constant theme with guests I have here on the show and just other friends in the industry. Tell me about what when we were talking about setting this up. One of the things we're talking about is kind of like I guess practical passive investing. Like, what are some of the tips you have for people out there? Because again, most of my listeners here are going to be realtors, and there's some folks in title and mortgage and stuff, but for the most part, it's going to be people out selling residential real estate that want to be investing. Like, they want to have passive investments, but they're not real sure maybe some of the finer points about it, or really how to do it. What kind of advice do you have for folks like that?
Well, no different than our clients that we're trying to assist with identifying what is the best product for them. The same, I would say, for people that are trying to get into passive investing, that you need to define what is it your goals are. What is it that you're trying to accomplish with the investment? So for instance, if we look at self-storage, people might say, well, it's self-storage. There's only one asset class, but there's really three. And the three different asset classes are not designated by how good the neighborhood is. It's the type of product. So a class C is like as a first generation self-storage facility, typically smaller, might be in a rural location. And it's the classic drive up. So you're looking at maybe anywhere from 50 to 100 units. And we view that as like a penny stock. It's just going to have a good, consistent yield. It's not going to do anything, tremendous in terms of growth rate, but it's going to be a consistent small yield. The next one would be the class B, which would be like a second generation or current generation of self-storage. So it might be more suburban, could be drive up, could have a fence, could have climate control, but typically between like maybe 100 to 300 units. And that is going to be more like a blue chip stock. So you're going to have a better consistent yield on it. You might see a little bit of growth, but it's just going to be a good performing stock for you. And then class A is like the new urban facilities, which is what we're doing. When we're converting, we are taking existing warehouses that are underperforming and converting them into self-storage and making them class A. And those are bigger facilities. And those are more in urban settings where you actually drive into the building. It's fully climate controlled. You're fully inside the building when you unload things. So you're dry, safe, and secure. And those are typically above 400, maybe 400 to 1,000 units. And we see those as growth stocks. So you're going to see both appreciation and get cash flow out of them, but they take longer. So they have different purposes. They have different yields. So whatever we say to someone is, are you looking for increase in your income? Are you looking for your net worth to increase? Are you looking for tax shelters? Are you looking for appreciation? These are all the different conversations that we have with people that approach us about getting involved or participating with us, because we want to make sure that the asset class that is most desirous for them in terms of their goals and their challenges lines up. And if it doesn't line up, then go in a different direction. And so that's where we begin a series of questions to get to understand what people can do. But the first thing that people, I think, should do is identify what is the goal for your investment. Are you just looking for a yield? Are you looking for growth? Are you looking for tax shelter? All those different things. So I would say 50% of our investors are investing with us because they want the tax shelter. They're not as concerned about the growth.
Gotcha. And then forgive my, ignorance, just having never done this before. Is that typically people are together? It's like an investment group. Is it someone like me? I call you, I'm like, hey, I've got X amount of dollars I want to invest, and I'm really interested in, obtaining more income or obtaining, tax shelter, whatever the case is. After we kind of go through our consult, is it where you're usually taking me and pairing me with someone, or I've got all the money, as once? I think a lot of people that I talk to myself included, I've done real estate investing, but not this specifically, sort of want to do this or know more about it, but don't really know where to start. Or they might think like, hey, I'm going to be the one to pony up all of the upfront money. Like, how does that even, how do you start to have those dialogues with, say, a first-time investor or someone who wants to at least dip their toes in the storage waters?
Well, the first thing we ask is, are you looking to do it yourself? Are you looking to hire us? Are you looking as a consultant? Are you looking to participate with us? Just different things along those lines. And we, for instance, one of our projects, we were approached and said, hey, what do you think about this property? We want to do it with you. And so the investor with us brought it to us, and then we're helping facilitate it on their behalf. And so, there is that sort of relationship. And other times where people say, no, I just want to strictly be a passive investor, and I just want to, act that way. So I want to be able to invest and then get the reports and know that you guys are handling it. So in each of those cases, it's different in terms of what each person is wanting to do or how they want to see the relationship. And so that's where those questions come in line. But I think that's the beginning part, is understanding, okay, are you wanting to be a passive investor? And if you do, then are you accredited or non-accredited, and what do you have to do in order to meet those requirements, and et cetera, et cetera. But so whenever someone has the conversation, that's our director of sales and acquisition is always beginning the conversation is, what do you see as your goals? What do you see as your objectives? And then what are the challenges that you're facing? And it might be, I don't know anything about it. Can you tell me about, this whole industry? How does it work? Then we begin just having the conversation about self-storage and understanding it. And one of the things that we can do for you is, and for your listeners, if they want to learn more about self-storage, if they email us and reference the show, we'll send them a feasibility study. And the feasibility study is from a project that we did, and it's historical. And so it not only describes the industry, but it describes the market where we were going after. And it's very educational. It's about 175 pages. And it goes into detail about why the market exists, why the market works, and about the industry, and then specifically about why that property works.
Fantastic. And what's that email address? I'll make sure I get it in the notes.
So it's info at Coda, CODAMG for managementgroup.com. Info at CODAMG.com.
Awesome. All right. We'll make sure we get that on the notes for you guys. So if you're listening right now on the go, it'll be there on the YouTube notes, as well as the notes on the podcast webpage. I think that's great. What are some other things that tend to, I guess, maybe surprise people, or maybe just be of news to them when it comes to self-storage? Because I'm assuming you're obviously a subject matter expert at this point, clearly. Wow, that was a really dumb statement. So, but it's why we're having the conversation. But what are some of the things that you tend to see catch people off guard or surprising them about self-storage?
Well, I think that the first thing that catches people off guard is just how predictable the model is. When I was doing multifamily, we were sort of like licking our finger, holding up and seeing which way the wind blew. And, is there demand? Is there not? But, the feasibility study is dwells down and digs in on a 3 to 5 mile radius. And if it's out in the country, like a 15-minute car ride, I mean, that is our market. So when people say, hey, I want to do self-storage and I want to do it in Chicago, or I want to do it in St. Louis, or wherever it is, that's too broad of a definition. We need to get into a very specific location so that we can study what the market supply and demand is for that 3 mile radius. And, it's a very predictable model. And so to me, that is one of the beauties of it, is that the fact that how well it can be modeled out, and then conversely, how well it does in recessionary markets. Those two factors are the biggest shockers for most people when they're learning about self-storage.
What do people really approach it that way? Like, I guess I would, and again, this is just maybe my sort of not understanding it view. I would think if I'm reaching out and saying, hey, Scott, I really want to invest in self-storage, I guess first thing that comes to my head is I just don't care where it is, but rather my goal of maybe it's increasing that income, or the tax shelter piece that we mentioned earlier, or something that'll, increase in value over the next 5 or 10 years, where I can have an exit type of event to create more cash in the future. To me, it seems like that would be the more obvious first goal or kind of first thought. do more people come to you with like, hey, I want to have self-storage in this location versus, hey, I want to have self-storage because I want to increase my net worth or my passive income?
Well, I would say that, there's two different types of people. One, the passive investor says, hey, I want to get into it. And, I'm not as concerned about where it is. More importantly, I just want to make sure that the market is good. So which then leads us to the next part. And we get weekly calls where people say, I got a perfect property for self-storage. I really want to do it here. And then we look up the data on it, and it's like the absolute worst place to have self-storage because it's oversaturated.
Right.
And so that if it's oversaturated, then your rental rate is going to be too low. It's your lease up is going to take too long, and you're never going to get those dollar amounts that you're hoping to get. And so understanding the market is vastly critical to making sure that if that's your goal, is to be able to flip it, that you have the economic ability to get to that point. And
Okay.
so it becomes very, very strategic, very, up in front very quickly.
Yeah.
And so that's where we'll go to every single time.
It does seem like very, to me, there's obviously, we got to get down to, no matter what, and same thing with any other investing, get down to, hey, what are we really after here? We got to get down there first, and then do our homework as to, the best way to get there, is what I'm really hearing. What are some things you wish more of your either customers or clients or potential clients, or maybe even referral partners, knew about your business and or self-storage, that they don't? Like, if you could, I guess to take the Tim Ferriss question, if you could have a billboard that every single person who would ever sort of do business with you on one level or another, whether directly or indirectly, would see, what would be on the billboard?
Well, I mean, it's hard to put that in a billboard, but for us, it's just like how thoroughly we analyze things and go through it. And, the extents that we're taking to make sure that the investment is protected and doing well. That is our biggest objective that we have. Because without that, the investment is, if we're not doing everything we can to protect it and make sure that it's good up front, then it's just an incredibly risky venture. Any real estate is risky, right?
Yeah.
So the more that we aren't doing our due diligence, the more that we're not looking at every aspect of it and trying to improve every aspect of it, that increases the risk. And so we're trying to minimize the risk as much as possible throughout the entire process. And for us, that's the biggest hallmark of what I feel that we do is, and that's the reason why we started our own brand, One Stop Self Storage. We had one of the largest REITs in the country running our facilities, and we were seeing our expenses escalating, growing 40, 50, 60%. And the lease up closures was well below market standards, and it was just not sustainable. And so we instead of just continuing the pattern, we felt we could make the necessary steps to make sure that our investment was protected, and was opening our own brand. So we spent a solid 8 months of the first, the end of last year and the beginning of this year, positioning and getting our all of our strategy, all of our marketing, everything ready to go so that we could seamlessly transition it. And since we've done that, we've been outperforming the REITs in terms of closing, in terms of revenue, in terms of expenses, all those things. We've been outperforming the REITs.
That's fantastic. I guess, who's your ideal client? Like, what does that person look like? Meaning, what are their features or mindsets, or maybe even liquidity like? Who's ideal for you when you meet them? You're like, oh, this is going to be a great customer to work with, client to work with, potential partner. Like, what are the traits of that partner or client?
Well, I think it's someone who understands real estate, and they understand there's got to be a level of patience, especially what we're doing in terms of, if we're developing something, it's got to be, a 3 to 5 year investment. This is not a quick flip. These are type of things that it takes time and it takes effort. And so they have to understand that there's a level of patience that's going to come along with this. So that's from the investor side. Our client side really depends on each market, because of the fact that when we learn that specific market, we understand the demographics of that market, and then we're adjusting the size of our units to meet that market. And so it could be businesses or people that are in transition. And so for, like our Dayton project is vastly different than our Chicago project. Our Chicago project, we have, 500,000 people within 3 miles, and 66% of them are renters. And our Dayton project, half of our tenants are businesses. And so, it's a vastly different market. So we understand, when we're going into it, who we're trying to serve.
That's fantastic. What else should I have asked you about, whether about self-storage or Coda in general, or yourself, that I haven't yet? What's a good topic I've missed?
Well, I think the biggest thing where we see in terms of where there's too much supply, the indice, is it's called the square foot per capita. And so where supply equals demand is typically around 7 in the country, 7 square feet of lockers per capita.
Okay.
And when we begin pushing above that, that's when you see drops in the pricing. That's when you see your velocity begins to slow down and it takes longer to lease it up. And if we're below that, then obviously we can set the pricing more and we have faster lease up. And so we're always going into markets where we're below 7 square feet per capita. And we're seeing like Florida is now pushing 11. There's 11 square feet of self-storage lockers per capita in Florida, and the East Coast is like 9, and Texas is getting up above 9, and same with California. So those are the markets that we're not trying to avoid them, but we're being very specific within those markets to make sure that if there is an area that we're below those numbers, because otherwise it's just a recipe for disaster in terms of the lease up.
Wow. So square foot per capita. I'm just writing that down for my notes here. That's interesting. I never would have thought, but I guess that makes a lot of sense. You're judging that based off of, hey, I need so many square feet or so many lockers per X number of people, right? For every 100 people, I need X amount of storage space. So
exactly.
That does make sense to me. That's fantastic. I got to ask you this, more of a rapid fire question, nothing to do with real estate. Are you Cubs fan or Sox fan?
Cubs fan.
Cubs fan.
But
okay.
I don't root against the Sox. I mean, they're Chicago, right? So, but I prefer going to a Cubs game than a Sox game.
Yeah, I bet. What about, or I assume you're a Bears fan?
Absolutely.
Awesome. All right. Anything else really Chicago about you that we got that you want to share, or anything maybe that most people don't know about, Scott?
Well, I think my first sports love team was the Blackhawks, and so that I grew up going to Hawks games. But that was always my favorite growing up with the Hawks.
That's awesome, man. Well, Scott, I just want to say thanks a lot for taking the time to be here today and educating us on not just self-storage, but kind of your journey and what you've been through. I think that's really cool. And number one, you gave me a lot to think about as far as the things that go into self-storage. But for me, it was nice to have that reminder of, as you actually got more narrow and more niched on what you're focused on, your business and your world starts to get bigger. It's just a constant reminder of that truth. So I just want to say thanks a lot for sharing that.
My pleasure.
And where would be the best place for any of our listeners who wanted to kind of learn more? I know we got the email address, which we'll for sure put in the notes if anybody wants a copy of a study. But if someone wanted to connect with you, say on social media or website, what's the best way for people to kind of keep up with you?
Well, there's CodaMG, so .com, CODAMG.com. And then they can also see our new website, which is onestopselfstorage.com.
That's
so
awesome.
That's one stop self-storage. It's all written out, .com.
All right. We'll get those in the show notes for you guys as well. And Scott, I just want to say thanks a lot for being a guest here on the Kevin and Fred Show. I really appreciate it.
Thank you very much.
All right, guys. Hope you enjoyed today's episode. I know I did, and we'll see you next week.